Pavitra, but that's with Brigade Enterprises, where the revenues have seen a growth of around 7.5%. Profits are down 21%. Now, the question over here is the kind of disconnect that's happening, because the sales have hit a quarterly high as well of almost 1,575 odd crores, whereas the consolidated profit has actually dropped by around 21%. Now, the key question over here is, what are the factors that are leading to this kind of a disconnect between the top line growth and the dip in terms of profitability? And when does the management expect this profit growth to align with the revenue growth as well going ahead? In addition, the operating margins, when you see for the real estate segment as well, they've come in that range of around 10 to 12%. We're talking about a number of 26% EBITDA margin versus a 28% on an overall business basis. We have Pavitra who's back with us. Pavitra, are you able to hear me?
Yes, I can hear you and I can see you as well.
Great. Pavitra, my question coming to you is, net sales all-time high is what that number has hit on a quarterly basis. However, you've seen the profits which have dipped this time around. One, what is driving this kind of a disconnect? And when do you expect the profit growth to actually align with the revenue growth going ahead?
Hi, thanks for having me. So our pre-sales numbers that you're seeing and the profit, there will always be that lag and disconnect. One, because the profit is related to the revenue, and the revenues, especially driven for the real estate segment, is based on the Ind AS accounting framework, which we can recognize that revenue when we hand over or deliver the project. So the pre-sales are sort of like a leading indicator, but that usually takes, the construction lifespan of the project to reflect into the margins and the numbers as well.
Hi Pavitra, this is Sharad here. Pavitra, regarding the launches, what are the launch pipelines looking like? And for the fourth quarter itself, are we going to see some more launches coming up?
Yeah, definitely. We are hoping to see about 4 million square feet of launches coming up in the Q4. Unfortunately, those have been delayed for a couple of months. We would have liked to see some of them come in Q3 as well. But we're pushing and doing as much as possible to get that into the Q4 so that we can see those numbers come in on pre-sales, as well as support the overall number for the year. That said, these are, again, just timing related. We don't see any issue in terms of demand for our already launched projects, and even in the projects where we are yet to be launching, the demand on ground is very strong for the kind of product that we have envisioned.
Okay, so Pavitra, as you mentioned, a couple of launches that were expected in the Q3 that have not happened for whatever reasons. Your guidance has been around 15 to 20% growth when you talk about the pre-sales growth for FY26. Given the current headwinds, or I wouldn't call it headwinds because the demand is very strong, launches which have not happened in the Q3, which could probably get pushed to Q4, will everything still remain on track, taking the realizations into consideration? Are you still saying that the guidance of that 15 to 20% pre-sales growth is achievable?
So at a project-to-project basis, the realization and the portfolio, all of that is definitely on track. But in the past 9 months, about 50% of our numbers has come from new launches. And that would, we envision that to be the same for Q4 as well. So if there's further delays in Q4 in terms of getting approvals, then that will certainly impact our numbers for the quarter. And we would need those launches to come in order to meet the kind of percentage growth that we had envisioned for the year. Whatever we have already launched is pretty much on track, and we're seeing good traction there. But like any quarter, we need the launches to come in so that we can have that incremental growth from the new projects as well.
And my last question is in terms of office demand. 40% of your leasing comes from IT services. Are you seeing any risks in that portfolio taking the slowdown that probably is coming in?
So, yeah, the environment is definitely a bit uncertain, geopolitically, but we haven't seen that impact on the office market in our portfolio and in general. In fact, leasing is still doing very well. There's a lot of talk about IT services, but the demand is also coming from GCCs and generally, tech-related jobs that tend to be in our core markets of Bangalore, Chennai, and Hyderabad. So we haven't seen that impact in terms of our new leasing efforts or, on the industry in general, but that is something everyone is keeping an eye on.
Sure. So everyone's going to look at all of these aspects as well. But thank you, Pavitra. I know it's been a short conversation, but we will love catching up again to have a detailed conversation in terms of what's lined up so far. But moving on, as the